Think you need thousands to start investing? Think again. With just $100, you can begin building wealth today. Some of the most successful investors started with way less. The point is, it's not about how much you have, it's about starting. The earlier you begin, the more time your money has to grow. That's the power of compound interest. Your money makes money, and then that money makes even more money. Look, I get it. Saving money is important. It's what responsible adults do, right? We all want to feel secure about our future. You tuck it away in a savings account, pat yourself on the back, and call it a day. But here's the thing. Saving alone isn't enough. It's just the first step. In fact, you might actually be losing money without realizing it. Yes, you heard that right. How? 2 words, inflation and opportunity cost. These are silent killers of your savings. Inflation is like that annoying friend who always eats off your plate. It slowly but surely eats away at the value of your money over time. Let's say you have $1,000 in a savings account earning a measly 0.05% interest. Sounds great, right? Not so fast. The reality is quite different. If inflation is at 3%, your $1,000 is actually losing purchasing power. It's a harsh truth. It's like running on a treadmill. You're putting in the effort but going nowhere. Frustrating, isn't it? And then there's opportunity cost, which is basically the cost of missing out on potential gains because your money is sitting idle. It's like seeing everyone else at the party having a blast while you're stuck in the corner, too afraid to join in. You don't want to be that person. By not investing, you're missing out on the chance to grow your money exponentially. It's a missed opportunity. Investing, on the other hand, is like hopping on a rocket ship to wealth. It's thrilling and rewarding. It allows your money to work for you, generating returns that outpace inflation and help you build long-term wealth. Imagine the possibilities, and the best part? You don't need to be a Wall Street whiz to get started. It's accessible to everyone. With a little bit of knowledge and a willingness to learn, anyone can become an investor. Yes, even you. When you invest your money, it has the potential to earn interest or dividends. These can add up over time. Those earnings can then be reinvested, generating even more earnings over time. It's a powerful cycle. It's a snowball effect that can lead to significant wealth accumulation, especially if you start early and stay invested for the long haul. The earlier, the better. So if you're ready to break free from the shackles of a stagnant savings account and embark on the exciting journey of investing, buckle up, because we're about to dive into the world of investing with just $100. All right, so you've got your $100 ready to go. It might not seem like a lot, but trust me, it can be the start of something big. Now the big question, where do you actually put it? With so many options, it can feel overwhelming. Don't worry, I've got you covered. We'll explore some of the best ways to make your money work for you. First up, we've got the stock market. It's a classic choice for a reason. The stock market is more accessible than ever. Even with just $100, you can begin your investment journey. One of the easiest ways to invest in the stock market is through ETFs, or exchange-traded funds. They offer a simple way to get diversified exposure. When you invest in an ETF, you're essentially buying a tiny piece of all the companies in that index. This spreads out your risk. It's a great way to diversify your portfolio and reduce risk. Diversification is key to managing your investments wisely. All right, so you're ready to take the plunge and start investing. But where do you even begin? Don't worry, it's easier than you think. The first step is to choose an investment platform. There are tons of great options out there, like Robinhood, Fidelity, Vanguard, or M1 Finance. Each platform has its own pros and cons, so it's important to do your research and choose one that aligns with your investment goals and risk tolerance. Once you've chosen a platform, it's time to open an account. This is usually a pretty straightforward process that involves providing some basic information about yourself and your finances. Don't worry, it's all secure and confidential. Once your account is set up, you'll need to link it to your bank account so you can transfer funds. Now comes the fun part, actually investing your money. Most platforms make it super easy to buy and sell investments with just a few clicks. You can choose to invest in individual stocks, ETFs, or other assets. If you're not sure where to start, many platforms offer pre-built portfolios based on your risk tolerance and investment goals. One of the best ways to ensure investing success is to set up automated investing. Automated investing takes the emotion out of investing and helps you stay disciplined, even when the market is volatile. All right, before you go off and start investing your hard-earned cash, let's talk about some common mistakes to avoid. These are pitfalls that can cost you dearly if you're not careful. Trust me, I've seen it all, and I'm here to help you steer clear of these pitfalls. Knowledge is power, and being aware of these mistakes can save you a lot of trouble. First up, let's address the elephant in the room: trying to get rich quick. This is a trap many fall into, thinking they can make a fortune overnight. We've all seen those ads promising overnight riches, but let me tell you, it's all smoke and mirrors. These schemes are designed to lure you in and take your money. Investing is a long game, and anyone who tells you otherwise is trying to sell you something. Patience and persistence are key. Don't fall for the hype. Stay grounded and stick to your plan. Instead, focus on building a solid investment strategy based on your financial goals and risk tolerance. This will serve you much better in the long run. Next up, let's talk about diversification. This is a fundamental principle of investing. You know the saying, "Don't put all your eggs in one basket"? It's a classic piece of advice for a reason. Well, the same applies to investing. Spreading your investments helps manage risk. Diversifying your portfolio means spreading your money across different asset classes like stocks, bonds, and real estate. This way, you're not overly exposed to any single investment. This helps to reduce your overall risk. A well-diversified portfolio can weather market fluctuations better. If one investment takes a hit, the others can help cushion the blow. It's like having a safety net. Another common mistake is panic selling. This often happens when investors react emotionally to market downturns. When the market takes a dip, it's easy to get caught up in the fear and sell off your investments. This is usually a bad move, but remember, the market is cyclical. It has its ups and downs. It will go up, it will go down, but over the long term, it has always trended upwards. History has shown this time and again. By selling your investments during a downturn, you're essentially locking in your losses. This can be detrimental to your financial health. Instead, try to ride out the storm and remember that market dips are a natural part of the investing cycle. Stay calm and stay the course. All right, let's recap what we've learned today. Investing is crucial for building long-term wealth and achieving your financial goals. You don't need thousands of dollars to get started. Even $100 can make a difference. Remember the power of compound interest. The earlier you start, the more time your money has to grow. When it comes to choosing where to invest your $100, you've got options: the stock market, cryptocurrencies, real estate, high-yield savings accounts, bonds, or even investing in yourself. Do your research. Choose investments that align with your risk tolerance, and remember to diversify. Getting started is easier than you think. Choose an investment platform, open an account, and set up automated investing to make things even easier. Stick to your plan, ride out the market's ups and downs, and avoid common mistakes like trying to get rich quick, not diversifying, panic selling, and ignoring fees. Now I want to hear from you. Where would you invest your first $100? Let me know in the comments below. The best time to start investing was yesterday. The second best time is today. So what are you waiting for? Go out there and start building your financial future. So, there you have it. Everything you need to know to start investing with just $100. The most important thing is to start now and let the power of compound interest work its magic. Even small, consistent investments can add up to significant wealth over time. So, take what you've learned today, do your research, and start building your